You can see we did 8,681%. Now, if we go out, let's go out even to the 4-hour chart, 2,600%. Still beats buy and hold. Let's go down to a lower time frame. Let's go down to like the 15-minute time frame if you're really like a big quant. You can see 6,200%, still beating buy and hold. What's going on? It's Ryan here, CEO and head quant at Happy Trader. Today we're going to be looking at Marathon Digital Holdings. MARA is the ticker, and we're going to be looking at a bunch of different time frames, and we're going to be looking at how it did with happytrader.io versus just buy and hold. And we are going to be using our indicator along with a back testing strategy that's going to match up against our indicator. You can see it overlaying right there to get our results and make our determinations. Now, what I will say is Marathon, or Mara, however you want to talk about it, is a very volatile stock. Now, something that we've noticed with Happy Trader is the more volatile the stock, the better it tends to do with our signals. And that's kind of counterintuitive to the way the market works in general, because if you're doing something like selling option spreads or selling strangles, these are the kind of stocks that you usually want to stay away from because they're intrinsically, through that higher IV set up to make really surprising moves. And you really don't know oftentimes when those moves are going to come. But without further ado, let's make sure our back test lines up, and we're going to set some parameters. We're going to do a small account back test for $5,000 and see how we would have done from 2019 all the way to now. So Tuesday, February 27th, 2024. When we turn on and turn off our strategy, we get these arrows. We're basically going to be doing a long only. Stocks tend to go up over time. We're not going to be shorting a stock over that long of a time frame from January 2019 all the way to February 2024. So what we're going to be doing for this back test is simply performing a simulated buy of the uptrend signal and sell of the downtrend signal. Now, you'll see in a lot of cases, you can take profits a lot of times before you hit that uptrend signal, but for all intents and purposes, we are going to just keep it simple to show the power of happytrader.io and how good this indicator is and how good it is on different time frames, how good it is on different stocks. You can like and subscribe to see that. And where it really shines is in high IV situations or stocks that like to move, like the NASDAQ index, right? Like the QQQ, right? So the spider indexes. One thing I want to say is that something surprising that we've noticed is the uptrend and downtrend signals and these back tests, especially even the long only back tests over a long period of time, and especially with swing trading, have proven to do really, really well and beat the market in many circumstances compared to just buying and holding these stocks. So let's see if that holds true for this particular stock, Marathon Digital Holdings. Before we get started with the backtest, I do just want to go over to a very interesting headline I saw today on Yahoo Finance. Warren Buffett says the stock market is increasingly casino-like, and young investors need to remember this one fact of financial life. And he proceeds to go on about, how it's very addictive to speculate on the markets. And Charlie Munger, God rest his soul, we, really miss him a lot. And he was a diehard investor. So he was really about the buy and the hold and having high conviction with your securities that you're purchasing and all that good stuff. And you can see that if we get back to our chart here, we're going to start with our back test. I just wanted to throw that little bit in that Warren Buffett thinks we're getting a little overheated. I'm kind of reading through the lines a little bit. So the first thing we're going to do is turn on our deep back testing, and we are going to set our date range. I've already pre-done that. So that's going to be January 1st, 2019. And now we have 2/27/2024, and we are going to make sure that we set some parameters, right? We want to make sure that we're not using a $100,000 account because most of us aren't day trading with a $100,000 account. So what we're going to do is just set this to a $5,000 account, and we're going to trade using 100% of equity because we're only going to be using stock. We're not using options for this test. So pyramiding two or more orders in the same direction, turning that off, and we're going to go ahead and set our parameters there. We have our dates in play, and we're going to go ahead and generate the report first on the 45-minute chart. And let's go ahead and see. So we have 94 closed trades. We have average trade expectancy looks good. A percent profitable, you can see just a little bit better than 1 out of 3 trades won. But if you look at the buy and hold, but if you look at the back test for Happy Trader versus the buy and hold, you can see that we're really, really doing a lot better. So a Happy Trader, on these longer, like I was saying before, on these high IV, these longer time frames, it really seems to give you a good way to put on less trades. 94 trades with 52 average 45-minute bars. I mean, that's like not many trades over the course of several years, right? You can see the percent gain. I mean, that's absolutely absurd. Let's not show that to too many of the hedge funds out there. They're going to be knocking down our door to try to get our strategy, but we're not giving it to them because it's for retail only, and that's the beauty about Happy Traders. So if we go to the performance summary, you can see the net profit is the difference between the gross profit and the gross loss. The list of trades is where we really see Happy Traders shine, and we're going to go down to that very first trade, and we're just going to start, and you can see that we have our run up to 4,200, and you can see here on our list of trades. Okay, so you can see we're dealing with low share price all the way in 2019, right? Crazy, almost a penny stock back then. But you can see even then we had this phenomenal, if we're throwing 5K at it, phenomenal expectancy. So, winning less or slightly more than 1/3 of the trades is really the win rate for Happy Trader. And I say this all the time in our videos. You should like and subscribe and go back and watch some other stuff. But it's really important to know and to note that percent profitable does not singularly determine the expectancy. You can see our expectancy is amazing overall if you hold through these troughs, which is very psychologically hard. But let's say that you had a little robot trading in the closet that never told you about what it was doing, and you just wake up one day and your 5,000 has turned into almost a $500,000. That's going to be a pretty eye-opening revelation there, and it just goes to show that the old adage does ring true: scared money doesn't make money, because these big drawdowns are going to shake most people out of the trade. So one other thing, disclaimer: this is not financial advice. I am not telling you what to do or how to trade. I just wanted to put that out there. This is for educational purposes only. Now we are going to look at the list of trades here, and you can see right off the bat, our winning trades here in white are just absolutely smoking the trades in red. Now some of them don't, but you can see that when they do, let's go to look. We have $1,000 winner there. We're starting to get. We did have a pretty big loser there. That's a pretty interesting one. But look at what came right after that, right? So big loser there. We had a smaller loser there. A lot of people are going to go, "Oh, this isn't working. This whole Happy Trader thing. I quit." And then you get a $10,000 winner, right? So these expectancies and back tests are very important. That's why we run them. That's why we post them. That's why we put them in playlists on our YouTube channel. Full transparency, we're trying to give you as much data as we can about our strategy. Now you can see as we get up in size here, it gets a little bit crazier. You can see some of the profit versus the loss, right? I mean, big loser there. One thing I want to mention about these losing trades where, you had the opportunity to run up here is that exactly that. You did have the opportunity to take profit on a run up. So if you're more of a conservative trader, there was plenty of room in this trade before this trade went completely backwards down that trough for you to take profit, or at least hedge the trade with protective puts, futures hedging, taking the opposite side of the trade, converting to a strangle, delta hedging, going delta neutral, all those good things, right? And you can see that there are run up opportunities on most, if not all, of these losing trades, right? So you can just go down the line. You can see lost 10,000 going signal to signal, but we did have a run up of 17,000. So you had a lot of opportunity there to take profit early, right? So again, monkey brain, human brain versus machine brain are going to be two totally different things. So take this with a grain of salt. But what you can see is that the confidence, what this tells you is the confidence in our indicator is very, very high. The expectancy of our indicator, if you look at this trade here, this is a major, major trade, a $256,000 run up. Let's just go ahead and, give a round of applause to that one there, because that might be the biggest one we've had. But you can see the progression all the way from 2019 and the evolution of kind of, this stock and how many shares you're able to buy and all that stuff, in the beginning. And really, it just goes to show that if you buy these penny stocks, sometimes you do the due diligence and you look into the company, you can find value in some of these stocks, and you can see that the share price just has progressively been going up. Then it went back down again, and now it's kind of going back to the ups, right? So that's really case in point. There is, I'm not telling you to go out and buy penny stocks or over the counter stocks. I'm not giving you any financial advice. I'm just showing you how Happy Trader's doing. And you can see these are really easy trades on the 45-minute chart. Just for the heck of it, let's go back to the overview. And you can see we did 8,681%. Now, if we go out, let's go out even to the 4-hour chart. 2,600% still beats buy and hold. Let's go down to a lower time frame. Let's go down to like the 15-minute time frame if you're really like a big quant. You can see 6,200% still beating buy and hold. You can see this blue line is the buy and hold, and then of course green line's Happy Trader. You can see that we are just crushing it, but that percent profitable stays pretty consistent. Isn't that pretty interesting, right? But as you go down in time frame, your total number of closed trades is going to go up. But when you go out to something like the 45-minute chart, you're just kind of chilling. If you go all the way out to, let's say, the 4-hour chart, let's see what happens here. Oh yeah, now we're super chilling. 20 trades since 2019 for 4,200%. And if you look at the list of trades there, you can just see kind of what's going on, right? You can see that these winners are just absurd. I mean, you caught this huge come up here, and pretty great, right? 2020 to 2021 is really the name of the game. There was a full blown hold during the COVID recovery. So that's going to be today's back test. It just goes to show that Happy Trader is just continuing to perform very well. As far as I'm concerned, it is the best indicator out there. It works for day trading, intraday, futures, great for options, trading against these signals, selling spreads against these signals, all that good stuff. And with that being said, we're going to leave it right there. My name's Ryan. I'm the CEO and head quant here at happytrader.io. Have a great day and happy trading.